Hello, everyone. A warm welcome to another exciting installment of our weekly series dedicated to price action based technical analysis. In this episode, we will be examining the GBPUSD market structure where the pound sterling is fueled by the widely held expectation that the Bank of England will be raising interest rate for the 15th consecutive time on the 21st of September of this month. The question now is, how will this anticipation shape the dynamic of price action on this chart? Well, before we go in there, I would love to state that in our previous trading setup, of course, I didn't publish this, but it was duly followed up on my public platforms. We implemented a highly profitable strategy, achieving remarkable success with over 200 pips in gains as we took advantage of the bearish sentiment that gripped this market. And congrats to all who participated in that profitable journey. So, what lies ahead for the new week? Well, I've conducted a comprehensive analysis of the prevailing condition and harnessing simple yet effective tools such as trend lines, key levels, and chart patterns to gain insight into the historical price movements with the cable market. A friendly reminder, this video serves exclusively for educational purposes and should not be considered as financial advice. My objective is to empower you with insight into the GBP/USD chart and enhance your proficiency in price action analysis. Remember, Forex trading carries inherent risk, so always proceed with caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's dive right into the business. Now, the first thing we are going to be doing here is to run through the daily time frame, which of course I have emphasized countless of times that price action has been on a strong bullish momentum. And in fact, to further buttress the strength of the buyers in this market, we have a couple of ascending trend line since last year September to emphasize the bullish momentum identified here. However, besides this trend line, I have a key level situated at the 1.245, which I will be using to guide my trading activity for this week. And in fact, if we go to as far back as the beginning of the year, you will see how the 1.24500 area has been a strong determinant of price action. Now look at what happened here at the beginning of this year. You saw how this area was captured by sellers pushing price to the downside, and not until the month of April we begin to see some buy pressure around this area, which finally broke out of that level. And in fact, since then we have seen how this level has served as a strong buying niche in this market. Now, during the course of last week trading session, we saw how price came back into that structure, making this area a crucial point in the market where, depending on how price action reacts to this level or zone, will determine what our next line of action will be for this week. Now, one interesting thing about this key level is the fact that it also still lines up with that ascending trend line that we have here. Now, the question going into the new week is, will price action be respecting that zone again one more time? I mean the 1.245 to incite an uptrend continuation? Or is it likely, are there chances that sellers could come in to break down that ascending trend line to incite a sell-off? Well, in order to answer this question, I have identified a simple setup on the lower time frame, the 4 hours time frame to be precise, to look out for trading opportunities for the coming week. Now, before I go into the 4 hours time frame, I would like us to run through the economic calendar As you all know by now that these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. So for this asset, we are going to be focusing on high impact event from both the United States and the United Kingdom economic dockets. Now, for this week, the first high impact event is coming in on the 12th of September, that's Tuesday. And in fact, we have a handful of labor data coming in from the United Kingdom. We have the claimer count change, we have the employment change, and also we have the higher low unemployment rate, which of course will be giving us an insight into the health of the labor sector in the United Kingdom. Then on Wednesday, September 13, we have the Consumer Price Index, another inflationary index that gives us an insight into the inflation of the economy. Then we have on Thursday the Producer Price Index and the retail sales, which will be coming up simultaneously. Then lastly, on Friday, we have the Michigan's publication for the Consumer Sentiment Index. So with this data here, it is quite obvious that participants in the market will be anticipating this event, and the anticipation of this event will definitely reflect on the chart as price action. Talking about price action, we shall be scaling down into the 4 hours time frame, where I said earlier I've been able to identify a simple setup that we shall be using to guide our trading decisions for this week. And right here on the 4 hours time frame, what I did was to take into consideration the nature of price action in the last couple of weeks. And the first thing you will observe here is that since the beginning of this month of September, it is obvious that price action has been bearish, finding lower lows and lower highs in that regard. And after connecting the series of lower highs, I have a beautiful descending trend line, which we shall be using as one of our parameters to guide trading decisions for today. And do not forget our key level, which is situated at the 1.245, which we of course identified on the daily time frame. Now, for those who have been with me for a while now, you know how we use our key level. As long as price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying, and we are not going to be thinking of selling unless price action breaks down and retests that key level. Now, looking at the way things are going right now, if we look at what went on around this area on Thursday stroke Friday of last week's trading session, we saw that despite the lower highs and lower lows in this market, as soon as price got into the key level here, we begin to see some buy pressure resume around this area. This happened later Thursday morning, and it went on to happen on Friday, as you will see how sellers have found it difficult to break through that area. Now, will this zone here be a platform that will incite a reversal setup to push price to the upside? And is it likely that we are going to be seeing a breakdown of the key level at the 1.245 retest of structure to incite that downtrend continuation? Well, trust me, I will be with you in the comment section on Monday morning after we monitor how participants in this market will be reacting to this current zone to determine where our next line of action will be. If you have found this content helpful and useful in making your independent trading decision for this week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you will always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.